Good afternoon, everyone. My name is Elizabeth Crawford, Senior Assistant Regional Director of Engagement and Professional Network Initiatives at William & Mary. I'm excited to welcome you to today's webinar, Current Environment of the New York City Real Estate Market with Matt Wallace, Class of 2010, and Brian Lewis, Class of 91. Today's event is sponsored by the William & Mary New York City Network of Alumni, Parents, Family, and Friends. I encourage you all to join their Facebook group to continue conversation and to get information on upcoming events. Today's presentation is being recorded and we will notify registrants once the recording is available. Questions are encouraged for Matt and Brian, and they will answer as many questions as time will allow. If you roll over the bottom portion of the Zoom window, you will see a chat icon. Please use that feature to submit your questions, making sure that you are posting your question to everyone. Also, a reminder, this event is best viewed in speaker view so that you will see Brian and Matt better versus gallery view, which is more like a Brady Bunch or Hollywood Squares style. Throughout our event, I will monitor the questions and share them with Matt and Brian. We are truly delighted to have Matt and Brian join us this afternoon to share their expertise and insight with the William & Mary community. Matt Wallace, Class of 2010, has advised on over $35 million worth of sales in New York City with an average deal size of nearly $2 million. He is experienced in both resales and new development sales and marketing, including the luxury Woolworth Tower residences in downtown Manhattan. Raised in Alexandria, Virginia, Matt currently resides in Manhattan's Flatiron District. He holds a BBA in accounting and finance and a minor in economics from William & Mary. In his free time, Matt is an active investor and producer of Broadway theater. He sits on Madison Square Park's Art Council and mentors undergraduate students through the William & Mary Alumni Program. He is a patron of Elton John's AIDS Foundation and Alzheimer's Foundation. Brian Lewis, Class of 91, named one of Manhattan's premier brokers by Living Magazine, graduated with a double concentration in government and theater. Brian's studies took him to Paris, where he developed conversational fluency in French, and to North Carolina's School of Arts, where he studied acting. Brian fulfilled a lifelong acting dream when he moved to New York City, where he played roles off Broadway, on TV, in films, in TV radio commercials, and several audiobooks. Brian's true joy and success was discovered when he began selling homes. Brian has traveled the world, but his favorite place is New York City. Brian lives with his husband and daughters on the Upper West Side. I will now turn off my screen and turn it over to Matt and Brian for conversation.
Thanks, Liz. Hope everyone can hear me. Happy to be here to talk to you all. Thanks for joining us. Brian should be here shortly. I know he was working on a deal, so hopefully he can hop on soon. But as Liz mentioned, I'm Matt, Class of 2010. I've lived in the city now for over 10 years. And yeah, I'm happy to discuss real estate and answer any questions that you have. I guess a little bit of a background about my process here. I originally started my career in consulting and then went away into real estate, and I've been doing this now for almost 5 years. And you know, it's a crazy time, and real estate in general goes through cycles in the city and nationwide, and there's still so much unknown about how we're all going to come out of, you know, this pandemic. But New York is resilient, and one of the things that we're seeing is there's always pent-up demand and people kind of in the wings waiting to buy and seize on opportunities. And so it's a great opportunity and time to be a buyer in New York. Things are down, and we can get into the numbers and talk about different opportunities. But again, I think by and large, we're going to see a lot of change over the next few months, and we've already seen it over the past few months. And you know, just with any change, there's opportunity in that, and so it's trying to find those chances to come in and whether it's for an investment or a primary home. It looks like we have Brian now. Hey, Brian. I think I'm good. You're still on mute, Brian.
Is that I have my ear thing in?
Yep. So. We got you.
How are you guys? Hi, Elizabeth. Hi, Matt.
Hey.
I hope my delay didn't mess you up.
No, not at all. I was just gave a little background on myself and kind of the state of the market and the opportunities that in any, it's kind of a buyer's market, but there's always, stuff to find. And we're just, yeah. So you want to take it away and give a little introduction for yourself?
Are we Zooming?
Yes.
We're Zooming. I hope everybody out there in William and Maryland is well. My associate Spencer just came in. I'm going to wave to him. Hello. So we're sort of operating an impromptu office out of my apartment on the Upper West Side because we just entered phase 2, if that means anything to anybody outside of New York City, on Monday, which means the governor has deemed that we can work face-to-face with masks and we can do our thing. And so we've been shot out of a cannon because we had a deferred spring market. Spring market is now summer market collision. And I can't really easily go into my office at Compass because they have all these reservations and all these COVID things that we have to abide by. And the long and short of that is my apartment is the office. And my kids are in Long Island having a way more fun summer. And I'm going to head out there tonight. But the long and short of it is, as Matt was saying, it's a funny thing because I really didn't know how this market was going to at least begin. And I can tell you in the past 3 or 4 days, we've had offers come in. We've had full ask offers come in. We had a full ask offer on a townhouse in Brooklyn come in and then retract within 24 hours. Wait, Spencer's nodding. Does that mean they're back? Oh, no, he said no, they're not. So there goes that paycheck. But we'll still move forward. It's just a strange thing. And I haven't really gussied up the courage yet to do the taxi and the, Uber thing, even though I hear they're incredibly clean. So I'm riding around on a bike like it's, the early 90s in Williamsburg. That's how I'm getting to my appointment. So I have to build in a lot of time that I didn't know that I had to build in. And Spencer and I are kind of out here. It feels very, I've been doing this for a while. I started this in 99 and it feels like those early years when I just did that kind of stuff because I had no money to do anything else. And I got to tell you, in a weird way, it feels much more authentic. It feels incredibly real. Each showing feels like a victory. You bond more with the people. I just got off the phone with somebody that I was selling to, showing something to look at, to buy. And he's like, I like your approach, dude. You're riding around on a bicycle in shorts. I'm like, I'm sorry for my attire. But he said, no, I want you to sell my place. So, I mean, I just matched up. That doesn't mean that that's the key to success, is wear shorts and ride a bike. Because I kind of look like a pool boy. And I haven't had my phase 2 haircut, which is now allowed. It's just a wild mess. So that's my life. How are you?
Hi guys. So why don't we just start with some of the Q&A questions that were submitted ahead of time. And of course, I encourage everybody who's currently on to think of questions for Matt and Brian, since we so graciously have them this afternoon. One question that was submitted was, do you think COVID will have a permanent impact on real estate trends? Or is this just a temporary disturbance closer to a natural disaster, let's say something like Sandy a few years back? Will crowded metropolitan areas with sky-high property values be sustained? So Matt, why don't we start with you? And then Brian, why don't you give us your thoughts on—
And Matt, I will be listening. I'm just going to mute for a second while I communicate with Spencer, but I care a lot about what you say. So hold on.
Great.
I mean, yeah, to answer that question, I guess, what is permanent? I think, will there be significant change and change that lasts for a few years? Absolutely. I think what we're seeing is what will be hit the hardest is obviously commercial, as well as the rental market. So, leases are down year over year, lease signings, that is. And until people know whether or not school can begin and when their offices are going to open up, people are hesitant to commit to a 12-month lease. So I think that, again, and then whether there's a permanent, I mean, I guess, yeah, if you think that there's going to be a correction that lasts a couple of years, and yeah, I would say it's going to be permanent. but it also depends on your price point. So, you know, if you look at sales volume in the city, its new deal activity is down roughly 87% year over year. That increased in May and June, so it's now 67% down year over year, which is, you know, crazy. But if you go to the $5 to $10 million range, it's up in the 90s. So I think that some people are just waiting to see how things play out, and like I said, I think that there's always buyers in the wings. And so if you're a seller that doesn't have to sell, maybe you hold on to it. If you have to sell, then there'll be a discount. And typically there's, you know, there seems to be people that want to take advantage of those opportunities. I think, again, where you'll see the permanent correction is more in the commercial space where people rethink floor plans. I think open concepts at work may go away. You know, we had that push to shared workspace. Maybe we go back to cubicles. And then kind of how those spatial things work out and how much space people need if they're working from home part of the time, and whether or not retail stores can stay open. I think that's where we'll see more of like a permanent change in the market that, you know, and obviously that trickles down to residential, but I don't think it will be long-term as profound. Brian?
Hello. I agree with much of what Matt said. I feel like this is a bit of a Darwinian moment for New York. I feel like this is going to be a survival of the fittest in every way, meaning the people who live here who want to leave, they're leaving. So it's going to be, they're going to shed a lot of people who are sort of on the fence. People who love this city and know that the talent of the world and the country come here, they're still going to come here. I think it's a fantastic time for undergrads and grad students to come in, be brave, mask up, take advantage of some opportunities, because there's a generation of men and women who are at desks, who are now in the Hamptons or Connecticut and Jersey, and they're loving the Zoom world and they're just doing it. But if you're just out of school and you've got your degree in one hand and your dream in the other, get to New York, because you can get in these offices. You can be the one that's like, I'll go in, I'll do it all. So there will be a generation that will be able to create their identity and their place at the table right now during this time. As far as real estate goes, I have seen, we put some things on right at the end of the stay-at-home order, and our sellers were doing the showings for us, right? Like walking around, and we were on the Zoom and doing all the stuff. And we got some deals done, and they were all right around asking price, which doesn't mean our market is impervious to this, and it doesn't mean that we suddenly have found the secret sauce. It just means that 4 of our deals got into contract close to ask via Zoom. But the buyers were present. But we priced them with demonstrable value right there. Like I would have priced that at $2 million pre-COVID. We priced at $175 million. They grabbed it. They jumped. So there's a value seek, but I think that places with big outdoor spaces, people might want that. Places where, and I'm talking rental or sale, places where you can move your laptop around and have Zoom moments, places that will fit a Peloton bike. And everybody outside of New York City is laughing like, isn't that everywhere? And no, it's not. Because in New York, a closet is a gym. You do what you can here. And if you have the ability to be sort of moved around a little bit with your laptop or your Peloton bike or your, what are those exercise mirror, the mirror or whatever, whatever you can do, those are going to be the sales. Townhouses right now are having a pretty decent moment because they're autonomous. There's no doorman. All the things that made them unsexy to some are making them sexy to others because there's still a need. Now, I have kids in school here. My money is made on these streets. I'm staying. I'm not leaving. I may save up and buy a little place. We're renting a place out east right now. When I say out east, I mean like the end of Long Island, the Hamptons. But, you know, it's getting people off the fence. If you were going to get married, have a baby, upsize your apartment, you're going to do all that. If you were going to downsize, go to the suburbs, get divorced, whatever you were going to do, this is your moment. Because if you can't get off the fence during a worldwide pandemic and social unease moments, which by the way feels really good here in New York right now, you're not going to get off the fence if those things can't get you off the fence. So this is a moment of decision making, I feel. And everybody's been staring at their walls in New York, and they're going to renovate, they're going to upsize, they're going to do. The office piece, I feel like you're right, but we're going to get back to work. You can't operate Wall Street just by Zoom. You can't. Yeah. It's not efficient. It's really not. There's so much about our business, Matt. You probably know. You probably agree. We're people.
Yeah, absolutely.
It can only take you so far. And how do the young professionals grow? They can't get to the Zoom meeting 15 minutes early to chit chat the big gal or the big guy. So you need to be there. So I feel like get in the room. If you're young and you have your education, go be brave, put on your mask, Purell, do what you got to do and say, I'll do it. This is your moment.
So here's a good follow-up question to that, Brian and Matt, and you can both give your insight. Trinell Ball just questioned in, it seems that people will work from home more and use their office less. Do you agree with this assessment? If so, how do you view the state of commercial real estate? Do you see commercial real estate being repurposed for other ventures such as affordable housing, which there is a lack of in New York City? So I'd love to hear, and everybody else would love to hear your thoughts on that.
Matt.
Yeah. Okay. I mean, yeah. Are we seeing commercial space being repurposed? Absolutely. So I'm sure everyone knew about the Lord and Taylor building, that WeWork bought. Well, Amazon bought that, right? And, Facebook leased, so we do Hudson Yards, and Facebook, or related, does Hudson Yards, and Facebook,
It's all you, Matt. It's all
what?
you. Matt's the
Hudson
Yards.
So they leased 1.5 million square feet of office space, and they want a few other things. Ultimately, it may be 2.5 million worth of space, and that's on the back of Mark Zuckerberg saying, in the next decade, half their workforce can work from home. So they say that, but they still recognize the importance of space. So I think, again, the commercial space is just going to be repurposed to fit the need of the day. Again, whether that's, more individual pods that people can work in to limit exposure, whether it's going to be a hoteling system like all these big accounting firms and consulting firms had, where people come in certain days or certain weeks or certain months. I think that there's still going to be a need, and we see the big tech firms moving in and taking advantage of bankruptcies and people not being able to use their space. And I think that just goes to show that there is always a buyer and there's always a renter who will, at a certain price, it will go and they'll take advantage of the opportunity. And just like Brian said, I think that the productivity that we see from working from home, to me, is temporary because people assume there's an end in sight. So yeah, they're productive, but ultimately ideas grow and come to fruition from interacting and meeting with people. And I think there will be an importance of that. And people that are there are going to be able to you can't forget the people that are in front of your eyes, right? You can forget those people that you don't see every day. So people that are in the office, I think, are going to, come up with ideas and have more opportunities for them, in my opinion.
Yeah, it's true. I don't do commercial, but I know a little bit about that world just from my colleagues that do commercial. Look, before COVID, there were vacancies in New York. There's a little thing called the internet, and people like to shop on it. So a lot of stores, and this is not a new story, a lot of stores have basically storefronts and they're kind of empty and they're just for presence. Look at Fifth Avenue. They're not very crowded, those stores. But Nordstrom had just doubled down. They put a big old thing up by Columbus Circle and they've rebranded what it is. So they have bars and restaurants. Now those are closed right now. But I can tell you, phase 2 started Monday, as I mentioned. That's why Matt and I can work now. And that's why we're both back at it. So can the cafes and restaurants if they're in the street, right? So, and I got to tell you, it's glorious riding my bike around the city and seeing all these cafes and people socially distancing in their masks. Everyone looks stupid, but hey, I think we're doing it right in New York. We're going to figure out the commercial piece. there's always a buyer or a renter in New York. Somebody smarter than me will come up with ideas about what those spaces that used to be this store or that store will be. Will it be affordable housing? I hope so. I hope so, because now artists and doctors can afford New York again, maybe. Exactly. Like, that's what I want. Like, I came here right out of William and Mary, and I was in 1991, and it was a little bit wilder, let's face it, but I loved it. And it will cycle, and it always cycles. But I can't imagine that the talent of our country is just going to suddenly not go to LA or New York, or Nashville for that matter, or wherever they're going to go. They're not just going to go to Des Moines. No offense, Des Moines, love you, but they're going to come here. It's harder. No one comes to New York because it's easier and cheaper. If you're that person, don't come. You're in the wrong place. You come here because you're going to learn a lot. I came here and learned about the hotel industry, the acting industry. I learned what I was good at and what I wasn't good at. And then I kind of fell into real estate as an orphan from those industries, and it kind of took off, and we're redefining it. I'm not being rigid. I'm not in my suit today with my short, tight haircut, like running around with my driver in my car, which I've done sometimes, which is awesome. It's not that time. So I'm just adapting. And as long as there's movement in markets, then Matt and I get paychecks. Now, as a homeowner here, I don't love that the prices have come down some, but I'm not going anywhere. So I'm here. It might be a time to sell and reach up. It's a good reach moment, right? But in some aspects of our market, we haven't seen declines. And commercially, TikTok, my daughters love that. They just took a huge lease, I believe, somewhere I read. I know Google is doubling down, and they're doing a whole thing in what they call Soho West. Because I've got an owner who has 2 townhouses adjacent. And I said, wait until Google does their campus there. You're going to make a lot more money. And they're waiting it out. So to your point, Matt.
And they're Pier 57 too.
Watch tech and watch medical. That's New York. Watch it. And it's still going to be the arts. The arts will be here, and they'll come back. They're not going to go to Des Moines. Sorry, Des Moines. Keep picking on you. They're going to come here. This is where the young talent always comes. In anything, they come here. And I'm not being cocky, I'm being realistic.
It's a very fair point. Somebody chatted in, several research resources have forecasted negative home price appreciation in 2020 and even 2021. Does that mean people should wait if looking to buy an investment property? Matt, why don't we start with you?
So, yes and no. I guess it depends on what the investment property is. So if you need a home to live in, I mean, let's say you're a young person and thinking of a 1-bedroom or studio because you're sick of roommates and you need to work from home more and take Zoom calls or do whatever. I mean, again, there's what the long-term appreciation looks like. I mean, that's one way to invest it. If you're doing it, if you want to buy a place and immediately rent it out, I think the rental market is struggling. So from a short-term investment standpoint, I wouldn't say that you're necessarily going to be in the black on your monthly, and because you'll have, vacancy loss for months to try to find a tenant. Anyways, so short answer, I think that, yes, there's opportunity. What I'm seeing at least is like roughly an 8% discount between the listing price and accepted offer over the last couple of months. So maybe it's an 8% market correction. We're already seeing things rebound. What happens if there's a second wave? I don't know. But again, in my own business, and I'm sure Brian is the same, March and April were kind of slow, and then May hit and it was like, boom, request. And so there was this pent up demand. And again, there's going to be sellers that don't have to sell and don't want to take a hit. And so fine. There's others that maybe will. And so those are opportunities, but you'll see the best of the market always goes first. So if you're in the market and you want to buy and it's, going to be for you, the best inventory goes first. And so it's kind of a little game of, do I wait it out and think they can go lower? do I buy now because they're already down a bit? I'd say buy now. It's in your favor, and you know, it doesn't seem like, at least on the lower end, sub $2 million, a lot of stuff is sitting too long if it's priced correctly and good.
I think that you're absolutely right. I also think that money's never been cheaper. If you're going to finance and use other people's money, do it. You jump. Hear me loud and clear, tribe. You're in the moment to refi, to invest, to stick your neck out. This is that moment. It's that moment that a prior generation had just in 2008 after the recession. This is that moment. We haven't seen that 20% drop in New York like that, but this is that moment, right? This is happening. So grab money when it's cheap, put it to work for you. The market still may come down a little bit, but you got it cheap. If you wait for the market to kind of come down even more, to time it, your money's likely to be more expensive. So where did you gain? Grab it if it's right for you. Only you know. It's like, when do I buy my stock? Like, am I a profit because I bought Tesla in November? Because my little nephew, who's going to go to Virginia Tech, sadly, he's not going to go to William & Mary. It killed me. It killed me. He said, Uncle Brian, can you put $1,000 right now in Tesla? And we were playing on my thing. I was like, sure. I didn't try to time it, and that thing went through the roof. But I did something else too that didn't go through the roof. But so timing a market is just, it's so hard. Have you heard of Baruch College? Like Baruch? So the man, Baruch, was asked once famously, like, how did you make so much money? How did you do that? He said, I sold too early. And basically what he was saying is he timed everything wrong, but he still in the long run did okay. So sometimes you look like a prophet if you wait that right moment, but I don't know. I think that you have to go when it's right for you as an investor, when the money matches your risk whatever your risk aversion is, just match it up and be bold and be brave, because, cash and courage wins the day. It just does. And I think there's opportunity. And some of the smaller investor units, I'm seeing them rent like that. Anything that's priced too high sits, but I had a place. I worked for a condo owner, and she lives in Israel, and she lost her tenant. Her tenant got very scared during COVID and ran for the hills. Tenants can do that. And she was left high and dry. She goes, what do I do? I said, don't chase them. Don't get legal. This is the wrong moment for that. Nobody would ever take your side. They're scared. Let them go. It sucks. Let's put it back on the market. So we had it listed. It was like a $9,800 lease. I ended up getting her $9,650 in like 3 days. The super showed the apartment. I did a Zoom, or actually that was a FaceTime, but we got it done. And then he's going to probably stay another year. We'll go back up. So there's always an audience if it's priced right, but make sure that you're buying in a location that makes sense. Know the audience that you're after. And I just want to say one more thing that we covered a little bit about how things change and working from home. Universities are struggling too, right? I don't have to tell anybody here at William & Mary. They're thinking, what's our next chapter look like? We've been around for 400 plus years. We've survived pandemics and wars, all kinds of things. And they'll figure it out. We'll figure it out. And universities like William & Mary and cities like New York are on the cutting edge. And we have the best brains and we have the best talent. We'll figure out what workspaces will look like, and we'll figure out what student life looks like. But I assure you, a student who just goes to the University of Phoenix online, not that there's anything wrong with that, they miss something, because you have to be engaged with people, like Matt said. And I can tell you right now, no insult to my education at William & Mary, it was great, but my life there in the theater, in the government department, late nights, that's where I learned most about life. It's that engagement, and we'll figure it out. And there'll be a vaccine, and then we'll move on until the next thing. But it's about the people, and we're all going to figure it out. We're learning how to do this while we're changing horses while riding a horse. It's like it's not very graceful. And we're writing the history that will be taught in business schools, in academia, in sociology classes, in theater classes. We're living right now what people are going to talk about for a generation or more. And it's kind of exciting. I'm not saying that anybody's pain and suffering is I'm not minimizing it, because some people are very, very affected. I'm very fortunate that I haven't been. But this is a moment that we're living. You don't need to look in the history books. Look at 2020. Who knew?
One
Thank
thing
you,
just
Brian. That was, oh yeah, no, go ahead, Matt.
I was going to add on to one thing about Brian, just from like the investment thing, and something Brian said reminded me and triggered me. I mean, if you are thinking about and buying, particularly if you're on the buy side, instead of being so price conscious, I would say like look at if you're trying to get a deal and there's already been, I mean, we have people, right, that are just either kicking the tires and throwing out low offers. That tends to not go anywhere, especially if there's already just been a price reduction. Typically, if it's a good agent or broker, they've already done the reduction for what they think the market can at least command. What I would say is if you're in new development, go after the costs that you don't recoup. Like you're establishing a comp, not only for your building, but also for your unit itself, which affects your future sale price. I mean, for example, if you buy a place and you spend $1 million and then do nothing to it and try to sell it in 2 years and the market hasn't gone up and you want 300,000 more, people are going to say, what did you do? Try to negotiate the costs that you don't get back. So for new development, transfer taxes, try to see if they'll make certain concessions or credits at closing. And you can see that on the resale side too. So not just new development. But some of your costs, the seller may be more willing to offer credits at closing or work with you. And then that, in the long run, is better for you in an investment perspective, because now your apartment looks like it was X amount of dollars, but in reality, that's not including all the costs it took for you to get there. And so just kind of food for thought.
Yeah. That segues actually kind of nicely into the next question that Christine chatted in. So for those who are renters, do you think there is space to renegotiate current leases? And I just re-signed a lease here. My rent went up another $100 and I'm kind of like, well, I haven't had access to all the amenities for the past few months and I still don't have full access. Should I be renegotiating?
Did you try yet, Elizabeth?
No.
It depends on the landlord. So if you are in a big building with a lot and they're just like, they have an on-site agent and all that, maybe you test the waters a little bit. Her job or his job is going to be to preserve the price, right?
Absolutely.
But you got to ask, and it's the approach. That's one approach. If you're dealing with a big landlord where one empty apartment's not the end of the world and they have thousands of apartments around the area, you probably have very little leverage. Talk to your neighbors to see if they're getting anywhere, kind of do that vibe, but you can try. You have to be careful not to frame yourself as a vulnerability, meaning, hey, my job's in jeopardy, and because they want you out. If you're going to be a vulnerability to them, they're not want you there. So you have to say, look, my finances are still good, but some of it has changed and I want to stay. I like it, but I haven't been able to use all the amenities. No one has. Approach it the way you would want to hear it if you were the landlord. Doesn't mean you're going to get it. Now, if your landlord is a person that just has 1 or 2 condos and they're doing it themselves, you might have more play. But approach it in the way you would hope to be approached if you were, it's like asking your parents to stay out late for curfew. You're not going to do it in an antagonistic way. You're going to like butter it up and you're going to work it. So try to work it, know what you want, know what they ask for, and say, you don't have to tell me now, just let me know. And I want to stay. There are a lot of things out there. I'm seeing prices come down. I want to stay. I like you. I like my home, but everything else in my life is I'm getting beat up on things that I have, relate for, can we work something out and let them propose something? They usually won't, but they want you to ask first. So I would say it really depends on who your landlord is and how deep their pockets are, and if they're a little investor or a major conglomerate.
Yeah. Little investors want people long-term.
Yes.
So if you stress that. One other thing is not all units are created equal. So like kind of to Liz's situation, if you're in a rental building or one of these larger conglomerates that, related, right, owns tons of rental buildings, your best argument is if a comparable unit is now on the market. I've had tons of clients that will say, oh, well, hey, what do I do about lease renegotiation? They want $50 more or $100 more or whatever they want. Yet the new inventory has some price incentive or month free or a lower price. I would recommend going back to them and saying, hey, you're going to have no vacancy loss because I want to stay, but can you honor what you did for these people because of all the things Brian just mentioned? Just say that. But then I would just that would be a good, for me, if I was a landlord or leasing agent, say, oh gosh, I have a good point. Maybe we should at least freeze their rent, let alone increase it. And maybe you'll get maybe they'll honor whatever the market price is. That might be a stretch, but at least you're like showing them within their building, your unit kind of thing.
One of the other things that I think it's all about relationships, right? I see on the chat somebody's talking about smaller landlords and relationships. I think that the approach is important. I think another thing to do is if you're really a neat person and you've taken great care of their asset, maybe you say, I'd love to have you over with a mask, or send some pictures. I'm really taking good care. I love it here. And when I do give you my 3-month notice or whatever you have worked out, I will graciously allow you to show the apartment. And I assure you the bed will be made. It'll look like this. I'm going to be your dream tenant. I'll continue to be it, and I'll take good care. And when you need me to be good, I'm going to be better, and it's going to be left better than you found it. Now, if you're a slob, don't do that. But you can demonstrate the value of keeping you if they don't intrinsically know it. Again, if the landlord's huge and they have thousands, they're not going to listen to that. They have a crew that's going to come in and clean it anyway. But showing that you're a good citizen is good. And if you haven't been a squeaky wheel and you have a relationship built, you're probably going to be okay.
Yep. Thank you both. I might be calling you both to have you come and talk to them for me. Another question. Data shows an exodus, most currently, from New York City since the beginning of Corona. Do you think New Yorkers are moving to the suburbs, or are they moving to other up-and-coming cities?
I think both. I mean, yes, to everything. Are New Yorkers staying and getting bigger homes? Sure. I showed a guy today who had a 3-bedroom. He wants a 4-bedroom. It depends on your situation. To my point earlier about being on the fence, anybody who's been thinking about the suburbs, like, should we? In New York City, it's usually the first kid, you stay, and then you start looking at schools, and our schools are really good here. You just have to navigate them. You have to know how to work and navigate it. I think our schools are fantastic, actually. But if you want to do the private school thing, it's expensive, right? Everywhere. But in New York, it's very expensive. So one kid is $55,000 a year for a kindergarten. And that's the taxes you're going to pay in one of the bedroom communities around New York City, right? So you can afford one kid in private. Once you have that second kid, you're like, wait, that's $100,000 a year.
Right.
The taxes in name suburb here, Montclair, New Jersey, Greenwich, Connecticut, Long Island, they're $50K or less. I have 2 kids. I win. School system's awesome. There's no choice. I get a yard. I get the whole thing. I just have to be comfortable with commuting life. But if you're a senior executive, you're probably going to be Zooming more than being in the office, to my much earlier point. So it's a play upon that. And there are some people who are running out there because they're scared of their shadow, and that's okay. I feel like they're going to run back, because I think in 2 years, they're going to be like, wait, why are we here? I love theater. It's back. I love restaurants. It's back. New York's an old city like Williamsburg. It finds its stride. We've been through this before. We've been through social upheavals, good and bad, necessary ones, absolutely. We've been through pandemics. We've been through wars. We've been through foreign occupations. We've been through terrorism. We'll get through it. We'll figure it out. And I think a lot of those people will be so happy in the suburbs, they'll never come back. There will be some that'll be like, why the hell are we here? Because we're city people. We loved what New York is. Now, right now, it's easy to be wondering why the hell you're here, because a lot of things are closed. Everybody's wearing masks. You see it. It's full frontal phase 2 life. And Broadway closed maybe till March, I hear. Sorry, all my theater people. Probably till March. They're saying January, really. And all the things you love the museums aren't open, but it will be open. It will come back. A brave new world will be created. And we may have lost a generation, and that's okay. But another generation will come up. And then I'm getting calls from people in the suburbs who are downsizing. One couple, because their kids are at William and Mary, and they're graduating. And they want a place in the city. They've been dreaming of coming back, and they feel like this is our moment. So they're running around their little masks, and they're tired of Westchester. They did it, and they want to be back in. So you're going to get it both ways. People leaving, people coming. It's New York. Stephen Sondheim, in one of his great musicals, has a song, and I should know because I'm a theater guy, but another 100 people just got off of the train and the bus and there's always people coming. We're having a bad moment. We've had plenty of bad moments. Plenty. The Depression alone, people just left their houses, left them. And that's when squatters took over, and then something new came along, and then there's just always something in New York, and it's going to reinvent itself, and this is not going to take us down. It isn't.
Yep.
Just a personal question I have. So, and it kind of goes off of what we were just talking about, but even after September 11th, I mean, everybody thought that people were going to leave New York, and there was actually suddenly a demand. Do you see something that, like, as tragic as, September 11th and the Corona kind of being on the same level, or do you think Corona is something that's more long-term, in terms of just, the way of life now that we have to live, and how that might affect people thinking about living in a city and all the different areas of exposure and how close we live to one another? So do you think this is more long-term than something like a terrorist attack that we experienced?
Matt, you want it?
Sure. I mean, I can begin. Brian was working through it, so he might have like a better answer. I mean,
You just outed me as old. I mean, can't you tell? So,
so what I've heard is, September 11th, the kind of rebounding or interest came back more quickly. Restaurants were open and people were looking to buy outside of downtown faster than, initially was expected. I think COVID is the uncertainty about in relation to openings in schools and all the rest is a little bit different. It seems a longer. I think it kind of goes back to the previous question. Ultimately, they always say like things ebb and flow out of Manhattan. So if prices get low enough, people leave suburbs or leave other boroughs and come back to Manhattan, right? And so if price gets low enough, people will stay there. So if people want space and then all of a sudden they can afford a 3-bedroom, they'll get that. And then they'll rethink where they live. I think one of the things that will be interesting to see change, if work from home continues, where do people choose to live? And what I mean by that is maybe a 2-hour commute doesn't seem that bad if you're only doing it 3 days a week. Or, you need a place in the city, and so you have a crash pad or a pied-à-terre or a 2-bedroom or, whatever you need that you come into the city just for those 3 days and your primary residence moves out of the city. I wouldn't be surprised if, people see that. And to Brian's point, you put kids in school out there, or your lives are out there, the sports teams are out there. You just have more space. So I think that, like, in that sense, the real estate market's going to respond to whatever the long-term lasting effects are of COVID. And I just don't know exactly what that is. Everything to me seems still short-term. Once corporations want you to stop working from home, then we'll see New York pick up. But if it's work from home 25% of the time, maybe that will change in the long run where people choose to live a portion of their time. And so you'll have a focus on smaller units that are pied-à-terres. That's just my opinion.
Yeah, there are two things I want to say there. I would say this. First of all, New York City's numbers in COVID, I didn't hear the latest, but I think we are lower than Tallahassee, Florida per capita, but that could be an invalid point by now. I've been saying it for 2 days. That could change, and I hope everybody's numbers go down. It's not a brag point. So everybody's departure to the suburbs from anywhere, out of DC, out of Atlanta, to get out, the numbers are spiking in those suburbs. So I don't know how impervious you are. You're not on top of each other, certainly, but there's something to be said for being on top of each other because you have to be aware. There's a real ease in the Hamptons right now. I was out in Southampton and I was like, guys, there's a pandemic. And I'm sure there are exceptions, but what I was seeing was like people really like hanging out. So I don't know if you are as safe as you think in the suburb, that's all, or in a little village like Williamsburg. I don't know. I'm not a scientist. I sell real estate, but I watch people. So that's number one. I don't know how. I have families I know that have run to Palm Beach, Florida. They're like, oh, we got all kinds of money. Our money is gonna protect us from a virus. I'm like, really? I hope so. I hope nobody gets it, but I don't know how far you can run. That's all I'm gonna say. 9/11, here's the difference. 9/11, everybody in America watched New York attacked. I was here, smelled it, saw it, horrible. We had a commercial running nonstop for weeks on New York coming back and the world rooting for New York. That's a free PR campaign that New York will never get again. The PR campaign that we've had for 3 months here is horrible. It's get the hell out. New York is the epicenter. Awful. Now we have to redo that, but we have to pay for that next phase. And we're writing those chapters now. Matt and I are out here right now writing one little piece of this chapter. And I worry about that because there is a generation that has seen 3 months of, oh my God, New York. I mean, how many texts did you get, Matt? Are you okay? Are you safe? And we're like, we're eating gourmet meals in my apartment. It's not easy, but we're clapping every night at 7. So we have to do that for New York, right? Because we're not getting that free commercial like we had forever. And we had everyone rooting, everyone wanted to be here, come see a Broadway show. And now it's like, oh my God, you're from New York, your license plate, I can't be near you, right?
Yeah.
But that's changing because now it's like, wait, you're from Florida, I can't be near you. No offense, Florida, love you. So it's I don't know if it's a different thing, 9/11. But 3 days after 9/11, I was walking through the mire of dust downtown because I was visiting Mary Stillwagon's place. Anybody from William and Mary circa the early 90s knows her. She's now in London. Her son is my godson. Love her. But anyway, I was walking to see if her place on Nassau Street was still okay 3 days after the buildings fell. So I'm wading through and I had a mask on like that was going to help. I don't know. So I go and I was in Tribeca and I was walking through, and if somebody had stopped me right then and said, you do know in about 3 years, the zip code you're in with all this dust is going to be the most expensive zip code in America. I would have been like, you're on crack. Get out of here. Is that a finger? It was like crazy, like literally. So I don't ever bet against New York, but I'm not a blind optimist. I know that this is troubled. I'm not Pollyanna. I'm not just selling you, but I'm bullish in the long run on New York. It will always change. I'm concerned that the PR has been horrible for so long. And I don't think our leadership, not to get political, is poised for that. They're in survival mode. And I think the next generation of leaders come to New York, be the next generation. I feel like their job is we're just gonna live it by example, and we're gonna change it. And we're gonna teach the country again how an urban environment does it.
Yeah.
We're gonna learn that together.
Awesome. One last really quick question. What do you think the effect of all these small business closures for months, like in an area where the West Village relies heavily on small businesses, what do you think that will do to that area of town? Do you foresee that having a huge struggle coming back. It's not cheap to live in the West Village, but will it become cheaper? What are your thoughts?
You live in the West Village, don't you?
I don't. I actually live in Chelsea, but there's some small.
Close.
I actually live on the High Line, and the High Line drives in, tons of tourism, and it's been closed since March. So I'm seeing it just even in my neighborhood, but I do have friends that live in the West Village, so asking for them as much as I am curious myself.
Matt, I talk a lot. Go ahead, Matt.
Hey, I'm sure there is another argument to this, but I've been for, or I think I'm for, a vacancy tax in this. I mean, I think commercial rents need to come down. We shouldn't have vacant storefronts, because to me, a vacant storefront that's vacant for over 12 months just means it's not reflecting market demand. And, we have to, as a city, realize that, commercial spaces are changing, and we have to make sure that places that are busy and restaurants that are packed, they can afford their rent if they're delivering what they need. So I do think that stuff needs to come down. Of course, if all small mom and pop shops close, neighborhoods lose their appeal. And again, I hope that there's opportunity and that rents come down and new places come in. But I think, as it relates to that, I mean, you're going to see that in, partly we're in Tulsa, Oklahoma, very random. And there are a lot of restaurants that are going to close there. They can't, it's relative, the price that these places do often, because, a rent here may seem exorbitant, but the density and the turnover and, Oklahoma may not get as many people. And so their rent's a lot lower, but their profit is, their profit margins are small. So all of that to say, I do think that there's still this honeymoon period of being in the suburbs, being out of the city. And it's easy because there's no FOMO right now, right? There's no fear of missing out because nothing's going on. But once you get that, people will come back. They'll start going to restaurants. Brian mentioned it. I mean, you look at right now, all the restaurants in New York, or a lot, can expand onto the street for larger outdoor seating. I mean, it's packed. People are excited to be back. And so I hope that, Tom Colicchio, who said that 85% of restaurants are going to close, I hope that that's wrong. I don't know where he got that number. But again, I think places will come in. I do think that we have to be patrons of those restaurants. And, I think the city should also, I know landlords have their own, property taxes and mortgages to meet, right? So it's not that simple. The banks aren't going to just forgive their debt coming in. So, I mean, ultimately, I think that prices should come down, but I think it's a really complicated number to get to and what that looks like. But, we'll see.
I think everybody's got to be scrappy. I think that it's going to change. If you think that you can just operate your small business the way you were, you're wrong. If you're a restaurateur and people are telling you you're probably going to close, they do that anyway, even on a good day in New York. It's a very competitive industry. And the small businesses, that's what makes a neighborhood. And I lived in the West Village in the 90s when it was small businesses. And having come from the suburbs of Virginia and Georgia, I thought it'd be great if like Home Depot came and all that. And they did. And then I was like, crap, this is just, and now we have Chick-fil-A, which we have everything. Like it's here too. So I kind of love some of it. But give your business to the small men and women who are out there in the front lines. There's a little cafe in my building downstairs, and they wrapped the corner on 75th Street and they put tables out. And my co-op board, you would have thought somebody had a gun to their head. They freaked out. And I said, back off. They're just trying to make it, man. They've had no business. We should go there. We should have a board meeting at the restaurant. Let's support them. Like, this is not the moment to be hostile to any business. If you want the capitalist engine to thrive, you got to feed it, and you've got to spend the money. And, and if you want to be social with your dollars and make sure that you're going to, African-American owned restaurants, go. do what you got to do. Vote with your dollars, man. This is so important. And go for the small businesses. And that's what will make New York thrive. And if this is a reset button, as it is with so many, and the prices do come down, like Matt said, then maybe a new young chef will be able to come in and go in a neighborhood that they weren't able to. And this could be exciting. It sucks for the people living through it, but the next generation's ready. Just like the next generation with their degrees are coming up and they're like putting on their mask. They're going to work. They're being brave. They're pioneers. So that's what this is. It's an expansion and it's a contraction all at once. And it's scary. For people who had it good, it's scary. But people who are on the fringe, who are ready to go, it's exciting. And Matt and I, to do our business, we've got to be both. We got to have a foot in what was and a foot in what is and what will be. And there's a tension, and there's that tension that has a 50-year-old dude riding around on his bike showing apartments with crazy long hair, like in shorts. That's what this is about, being on that edge. And I think New York is always on the edge, and it's that edge that keeps me excited. That's why I'm here.
Well, thank you both so much. Thanks for really sharing your expertise and also giving really, I think, a glimmer of hope for all of us, which we desperately need after 4 months of quarantining and just all the recent events of the world. So I really appreciate you both giving your insight today, and it'll be truly fascinating to see how events unfold in the coming months. And we wish you both the best. And of course, this isn't the end, but thank you again for your time today. And just some closing remarks from me. During this time, it is more important now than ever that we stay connected as a William and Mary community. And although we're not able to gather in person, it's events like this where we recognize how powerful it can be to gather together virtually and learn from one another. The William and Mary Alumni Association offers tons of virtual opportunities just like this and others that are available online on our webpage on wmalumni.com. So thank you again, Matt and Brian. I appreciate your time and look forward to hopefully seeing you in person in the coming months.
Thank you, Elizabeth. Thank you, Matt.
Have a great afternoon. Go Tribe.
See you later.
Have a good one.
Bye.